Hi, and welcome back. So far in our exercise, we have mainly focused on the source sheet. In this lesson, we will start working on the output that we will try to produce. As we already have an idea of what data we have extracted from SAP, it will be pretty easy to create a structure of the report we will build. So, the first thing we can say for certain is that we have 2 years of data, 2015 and 2016. Let's add 2 separate columns in which we will have data for 2015 and data for 2016. One of the most important drivers for FMCG businesses is volumes sold. And although volume isn't a financial measure, I would suggest putting it on top of our report. I will leave a blank row and will add gross sales income, which shows the revenue of the company before it provides discounts to its clients. That's why we'll have to add discounts. As we already said, gross sales income minus discounts equals net sales. Net sales is the amount of sales that actually goes into the company's bank account. This is the primary sales figure reviewed by analysts when conducting a financial analysis. If we subtract the cost of goods sold from net sales, we will obtain gross profit, which is a preliminary profit measure that shows how much a business makes after taking into consideration the cost of the products that it sells. There are 2 other cost items that we have in the source sheet: distribution and warehousing expenses. Let's add them to our structure. Okay. Very well. This gives us full delivered margin, a profitability measure that is typical for the FMCG industry, showing how much profit a firm makes when it takes into account the cost of production, warehouse, and transportation for its products. And that's it for now. These are the fields that we will try to populate in our next lessons. Thank you for watching. Hi, guys. In this lesson, we will add several formulas that will ensure, once we start populating the sheet with data from the database, everything will be calculated perfectly. Firstly, we can start by adding formulas that calculate each of the total and subtotal lines. I will add a formula that sums gross sales and discounts here. And then, below, I'll add another formula that calculates gross profit. These are the 2 subtotal lines. We'll have the same thing for full margin delivered. It will be the sum of gross profit, distribution, and warehousing. Very well. Now I'll copy these formulas and use paste special formulas in order to paste them for 2016. Okay, great. The other formulas we need to include are the ones located on the right. Here we have 2 types of variation calculations: absolute and percentage. The absolute variation is just the simple difference between the value that was observed in 2016 minus the value in 2015. We can calculate percentage variations by dividing the quantity that was observed in 2016 by the quantity we have in 2015 and subtracting 1. Good. Now we can paste the 2 formulas for the rest of the cells. The next step will be to include a few KPI ratios and prepare their formulas. For example, it will be interesting to see what percentage of net sales will be gross profit and FDM. Let's do that now. I'll type the formulas for these KPIs here. And when the numbers are included in the sheet, the 2 formulas will be calculated directly. This is how we perform a preliminary preparation of our report sheet. In our next lesson, we'll create a pivot table that is going to serve as a source for this report. That's all for now. Thank you for watching.